Hello everybody, this is Toni Turner and welcome to the market now as of about 1 p.m. on Friday, May 24th. Before we go on, please know that all of us at ToniTurner.com wish all of you a very safe and happy Memorial Day weekend. And with that, we'll turn back to the market. U.S. stocks gained some energy today ahead of a long Memorial Day weekend after President Trump indicated that the protracted trade war with China could end soon. The S&P 500 index is on pace to end the week 1% lower as the markets worried that the trade war would result in global economic slowdown. Adding to concerns that the broader economy was slowing, data showed that U.S.-made capital goods fell more than expected in July. Now let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart right now of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark index, the S&P 500. So we're looking at the SPY today, and as I captured this chart, the SPY was trading at $283.30 or about $28.33 on the S&P 500 itself. Now we know that it's down about 4%, a retracement of that from its recent all-time closing high, which was on April 30th at $294.02 or about $29.45 on the S&P 500 itself. Now, so far today, the SPY is trading in a narrow range. Still, we do have to note here it is trading below the red line, the 20-day moving average that's coming in at 287.61. Perhaps a little more importantly, it's trading below the 50-day moving average. That's the green line on this chart, which is coming in at 286.88. So now the SPY, S&P 500, has dipped below the 50-day moving average, which is watched by many traders and institutional traders. It's an important line, and of course we'd rather the SPY be above it. We still have potential support here at 280. That would be 2,800 on the S&P 500. We also have the 200-day moving average, the black line, coming in here at $277.38. So we do have potential support here. I could draw this line back a little bit if I could make that straight. We do have potential price support and moving average support here. The 200-day moving average is a pretty tough guy. Usually, we'll have to see. If the SPY should drop down below the 200-day moving average, again at about 277, then maybe it heads down to prior support down here at about 275. At any rate, that would probably portend another leg down for the market, maybe even heading toward 270. So if anything positive happens with this trade war, potentially we could see the SPY fly back up again. It's just kind of, we have to wait and see right now which way things are going to go. The next chart we're going to look at today is a chart that we look at a lot here. This is the iShares Russell 2000 ETF, the IWM. As I told you before, the IWM follows the Russell 2000 small cap companies valued at between $300 million to $2 billion. We watch this quite a bit in Tony's Market Club, as the IWM can act as a leading indicator for the market. Now, we know that since December 24th, when everybody came, most all markets, not all, most all markets came down here pretty dramatically at the end of last year, down to its lows here around, down to its lows around 127 or change. It rallied from that and came back up, but unlike the SPY, unlike the NASDAQ 100, the IWM didn't come back to its all-time highs. It just wandered up, got up to the 200-day moving average here in February, March, and April, and then just made a college try to get up above 161, couldn't do it, fell back down below its 50-day moving average, which is now coming in at 155.24. Its 20-day moving average and even its 200-day moving average coming in at 154.68. So when I captured this chart today, the IWM was trading at $150.60. It's hanging on for dear life to price support from March, which comes in at about, at 148. So fingers crossed here it stays above. Hope is not a strategy, of course, but for the sake of a positive market, it would be great if the IWM could stay above this potential price support here at 148. Again, right now it's at $150.68. Now, if we look at the RSI down here, the 14-day RSI, we see that it is at 40 right now. It's not in the oversold zone yet, which could potentially give it a little bump up when people see that. Maybe they buy it for a little rally. But it is definitely down very close to it. It's at 40, and of course, if on the RSI, if this line goes below 30, then whatever you're looking at is deemed to be oversold. And the MACD, of course, is trading below its zero line because the IWM is trading below the 50-day moving average. So bottom line here is whether or not the IWM can remain above these major support zones here at about 148. In the coming week, we will have to see which way it's going to go. I'm definitely going to keep an eye on the IWM because if it does get weaker, that could portend a little more weakness in the broad market. And of course, if it strengthens, the same goes for that too. We could see a little more strength come into the broad market. So what do we do in times like these when we're not quite sure? Today we're going to look at the Select Sector Spider Healthcare ETF, the XLV. Now the XLV has 62 holdings. The top components are Johnson & Johnson, United Health, Pfizer, Merck, Abbott Labs, and Medtronics. So basically in the XLV you have pharmaceuticals, you have biotechs, you have healthcare equipment, and healthcare providers. When I captured this chart today, the XLV was trading at $89.78, and that is right just smack on top of the 50-day moving average. Now, let's back up here a little bit. We are in a difficult market right now. It's with the news coming on the scene every day. We never know if it's going to be positive or negative. Most of it about the trade talks, trade tariffs. And not knowing from day to day, it has the potential, when the news does come in, it has the potential to drive the market higher or lower in a pretty dramatic way. So I'm watching the XLV because it is a defective oh goodness, it is a defensive sector. And plus, look down with me at the volume here. You can see after it did make that pretty dramatic dip in April, it came down, and then from then on you see more volume coming into the XLV, and price generally is on the rise with, again, higher volume. So that tells me something. Also, I've drawn a triangle right here. We have the upper channel line coming in at just under 91. We have the lower trend line coming up here at just over 87. So I would like to see here which way this triangle can break. If it can break higher, if price can move up to say $91, that means it's above the 200-day moving average and above this this downtrend, or not downtrend, but this upper channel line. If it can come up and close above $91 in the coming week, I may add shares of the XLV to my portfolio. I will set an initial stop at it's a tight one, at about $87.50. Then I will trail it higher if the XLV continues to rise. So you may want to keep, if the market keeps on being kind of a roller coaster here and uncertain, you may want to keep an eye on the XLV in the coming week to see if it does rise above its 200-day line, above this channel line coming in just below 91, and continue to move higher. It may be an interesting excuse me, place to be. And now On to the coming week's economic reports, but first, please join us this coming Tuesday, May 28th, for our next session of Toni's Market Club. Our sessions are usually held on Monday, but of course this coming Monday is Memorial Day, so this coming week we are holding it on Tuesday. If you're not sure how to make money in the market right now, let us help. During Toni's Market Club session, we talk about which side of the market to trade. I give you a mini trading lesson, and I also give you stocks and exchange-traded funds that may be ripe for high potential trades. If you can't attend the live session, it's not a problem. The recording is available to all of our members just after the session ends. This is a low-priced, high-value opportunity to learn how to trade more successfully and make more money. So please join us. For more information, go to the link on this screen or simply click on the button below. And now on to this week's economic reports. On Tuesday, we have the S&P Case-Shiller Home Price Index and Consumer Confidence. Wednesday, we'll have our usual crude inventories. Thursday, we'll have the GDP, Gross Domestic Product. That will be highly looked at, along with jobless claims, pending home sales, and our usual natural gas inventories. And on Friday, we'll get the University of Michigan Consumer Sentiment Report. Again, join us for Toni's Market Club this coming Tuesday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.